Hey everyone, Bill McCafferty here. Today is Friday, February 14th, 2020, Valentine's Day. Hope your week's going well. Hope you had an awesome day today so far. Hope you were very productive this week. I appreciate everyone reaching out. As you know, last week when I got on, I did not do an episode. I just did a quick little video of Family First. I had a family emergency. There's been a lot going on. So I appreciate everyone that reached out. Once again, it's always about family. You need to take care of your business on the home front to be productive in business and to be productive in life. So today I want to get started on episode number 5, a day in the life of an asset manager / note investor. So today's episode, we're going to rehash the last 2 weeks since I was not on last week to go over a day in the life of an asset manager / note investor. So let's get rocking. Let's go through the asset management company and let's see what's going on in the asset management company. As of today, I'm managing 115 non-performing second mortgage loans for, like I said, between about 25 to 30 different investors. Over the last 2 weeks, I brought in 2 new files, got them situated, got them boarded, moving forward on those 2 new files. Over the last 2 weeks, I had new contact with about 5 different borrowers. So we're in different stages of resolving that with these borrowers. Looking forward to helping them out and getting some things done for them. I sent out 3 new loss mitigation forms to 3 new borrowers. So they're working on those loss mitigation packages. I hope to get them back from them soon. Very productive over the last 2 weeks. I received back 5 different loss mitigation packages. So, as you heard on the previous episodes, once I get that loss mitigation package back, takes a couple days to process. And then I want to get some options over to these homeowners, help them out, and get some deals done. So when you can get 5 loss mitigation packages back in a 2-week span, that means you're doing everything right. You got a lot of activity going on and you're moving forward on getting some deals done. So when you get that many loss mitigation forms back, that means you're about to send out a lot of borrower option forms. So right now, over the last 2 weeks, I sent out 6 option forms. So, 6 different borrowers, 6 different families are reviewing their options. Waiting for them to get back to me so we can figure out what works best for them and to get them moving forward on a loan mod or maybe even a discounted payoff depending on what they choose and what they want to do. Over the last 2 weeks, I processed 3 different loan mods for 3 different borrowers. So we got those situated, got those all wrapped up. Homeowners are moving forward with a payment plan, and I got 3 of those resolved this week. I also sent out 1 new loan modification package to a borrower, so they'll be getting that situated over the next 2 weeks. They'll get that returned to me sometime in March, and we'll be moving forward with a payment plan for their loan modification. Also processed 1 payoff over the last 2 weeks. It was a big payoff. I think I mentioned it before, but we finally got it processed. We got it situated, and we're moving forward on that. We had 1 borrower file Chapter 13 bankruptcy. That was a Tennessee file. Probably was the best decision for the borrower. They'll be able to get their debt reorganized, get it situated. We had to file a proof of claim. Proof of claim basically lets the bankruptcy court know that we own a loan on a property. Here's our accounting. Here's our documentation backing up that we own a loan on that property, and we should be included in the bankruptcy plan over the next month or 2. Over the last 2 weeks, had 2 foreclosure sales. When I take a property to sale, there's 3 things that are going to happen. We're going to either get it resolved before the sale. Homeowner is going to file bankruptcy, or we're going to take it through sale, maybe get bought out at sale by a third party, maybe go through the sale and then eventually get it resolved. But they're the 3 things that will happen. They'll resolve it before the sale, they'll file bankruptcy, or we'll go through sale. So of those 2 sales, we got one resolved 2 days before the sale, got it all wrapped up and organized. That's actually going to be that's going to be the case study today. And then the second one, we decided to postpone it for 30 days to give the homeowner a little extra time to resolve it. So they're one of the borrowers that I received the loss mitigation form back from and that I sent the borrower option form to. So hopefully we get that resolved for them and we can cancel that sale. It's about 2 to 3 weeks out now. So that's what's going on in the asset management portfolio. And you can see there's a lot of activity going on. One thing I want to express is, I had a family emergency over the last 2 weeks. There's been a lot of stuff going on. And in order to stay on top of your stuff and to be able to manage a lot of stuff, like I said, I manage 115 non-performing second mortgage files. To be able to manage them and stay on top of everything, you really need to have your processes and your systems in place. We're going to do that on another video at some time. We're going to talk about processes and systems, but I can't express that enough. One of the reasons I do well and that I'm on top of all my stuff at all time is that I have a lot of processes and a lot of systems in place that help me manage and to deal with stuff in real time, so I'm able to get my stuff done and be productive. It's one thing I take a lot of pride in are my processes and my systems. So let's look at my portfolio, my company. So it was the end of the month and we are moving forward in the new month, which is February. So just processing a lot of my performing loans, making sure the payments were coming in, processing a lot of my bank statements, processing a lot of my servicing statements. We're getting close to tax time, so been in a lot of communication with my accountant and my QuickBooks people to make sure that we're on top of everything. And to come next month, middle of March, we're kind of finalizing everything and we're getting everything ready for tax time. I'm figuring out what different accounts I'm going to fund between the IRAs and the health savings account, what my tax burden is going to be, and things that I can do to lower that tax burden. Most of that stuff was already done, so we're just going to be finalizing everything. Within the portfolio, I processed one new loan modification. I brought that in-house and then I transferred it over to a servicer. We're getting that situated. The transfer date is the 25th of this month. Homeowners will be moving forward with a payment plan next month. So we got that situated. We're getting that situated with the servicer. And then I have a borrower that is looking to pay off their loan. They're going to sell their property to rental property. The closing is set for the 21st of this month. So just made sure they got the payoff from the servicer, talking to the homeowner and the realtor and the title company, just making sure everything is in order for this homeowner to be able to sell the property and to get my second mortgage paid off. So when that happens, we'll get the funds in and we'll figure out what else we're going to do, because once stuff gets paid off or once something happens, you got to get that money working. You want to stay liquid, but at the same time, you want to make sure your capital and your funds are moving, and you have that working so you're making money. So that's what's going on in my portfolio in the asset management company. So let's get started on the case study for this week. That's the one I mentioned when I was going through the asset management portfolio. We got this resolved right before the sale, canceled the sale, moving forward with a payment plan. So this is my Riverside, New Jersey case study. This non-performing second mortgage loan was purchased in February of 2019. We purchased this thinking we were a non-performing second mortgage. Fair market value on the house is around $200,000. There was a first mortgage on this property of around $200,000 too. So as you can see, this is a no equity deal. So we purchased what we thought was a non-performing second. Loan balance on that non-performing loan was $16,000, payoff of around $25,000. So we got that in, started the foreclosure process in March of 2019. And as we started moving forward, after the demand letter, we pulled title, and we pretty much found out that we were not a second mortgage. We were a third mortgage on the property. So it changes some dynamics a little bit, but a lot of things still stay the same. So over a 3 or 4 month period, it took us a little bit to figure out who the second mortgage was and what was going on with that second. We still pushed forward with our foreclosure. The first mortgage was current. So come October, we got a foreclosure sale set on the property for November. And right around that time, we got wind who the second mortgage lender was. We also found out that the homeowner resolved the second mortgage with another company that's actually in our business too. They just did a loan modification with that company on the second. So once we found that out, we kind of definitely knew that the homeowner would want to resolve the third mortgage, even though they were a little confused since the second and the third mortgage was originated by the same company. They kind of forgot that. I'm not sure how people forget those things, but things do happen. So they got that second resolved. So started dealing with the homeowner's attorney late October. He was also a little confused. His attorney was a good friend of his. So we slowed everything down. We postponed our sale, which was scheduled for November. We postponed that for 30 days. So the new sale was set in December. Things were still moving slow with our modification process. So some of these states, it's not a big deal and it's pretty easy, and it's not a big expense to postpone the sale. Some states you can't do that. You actually have to cancel the sale, and it's a whole process, and it costs a decent amount to do that. But in New Jersey, it's not a big deal. So in December, I decided to postpone the sale again for another 30 days. So this would have been the third time that we the sale was set in November. We postponed it for 30 days. And then again in December, we did it. So we had a sale set in January. It shows good faith with the homeowner. We are trying to resolve it. As much as we have a sale set, we really don't want to foreclose. We want to resolve it with the homeowner. But we do need to move forward and to handle our business the way we handle it. So throughout December, in good communication with the borrower's attorney, finally after the new year, we decided what plan we wanted to work out. But we were still backed up against the wall a little bit. So once again, I postponed this for a third time and took it out to February. I put the cost on the homeowner this time. They were fine with that. We eventually resolved it with the homeowner. Like I said, this happened in the first week of February. Canceled the sale. So what actually happened was homeowner put $4,000 down up front in arrears. We then we gave them a credit. We then amortized the loan over 10 years. Put them in a payment plan on a monthly payment that they could afford. And then the remaining arrears we deferred to the back of the loan, kind of not really a balloon, but just deferred because we're not charging any interest or late fees on that deferred arrears balance. So once again, pretty wild deal. Purchased as a non-performing second, ended up finding out we were a third. Helped the homeowner get this all resolved. Got my client situated. So that is my Riverside, New Jersey case study. We went from a second to a third, but the homeowner's all situated. Pretty wild. As you can see, people do have 2 or 3 different mortgages out on their property. So, what would make sense for this homeowner at some time is to get the second and third mortgage paid on for a while. We called that seasoned. Put some seasoning in the loans. And then actually probably try to refinance all 3 loans into one mortgage. Get the 3 mortgages paid off, and then just have one mortgage on their property where they're just paying on 1 instead of 3. So I hope you like the case study. That's what's going on in the portfolios. Finish off the day strong. Make sure you finish off the week productive. Enjoy tonight with the loved one. Get some relaxation over the weekend. Monday's going to come quick, and you need to be rejuvenated for the new week next week. So have an awesome one, and I'll talk to you soon.